Yo, what up homies? Back at you yet again with another video. You know we're live Monday to Friday, 7 p.m. Eastern time, but here's a good old daily update. Last night, Gary Genlser was live with the Washington Post, giving his opinions on what's next for crypto. You know, the SEC has been very harsh on Ripple, very harsh, now going after Blockfi, potentially Coinbase, and we know many other cryptocurrency companies / cryptocurrencies. So let's dive into that. I think they're coming to take your crypto, homies. I think they're coming to take our cryptos. We have to see what's going on. But without further ado, let's smack that subscribe button and smack that like button. A first little clip from the live stream right here starts about 1 minute and 44 seconds in. Let's give that a viewage.
A blip in the cryptocurrency world, and that's the dramatic drop in the value of Bitcoin and other tokens last night, down 8%. I want to ask you what that experience told you about the basic issue of crypto's stability as an asset and the.
Hey guys, just a friendly reminder, we got Gary Genlser on the right. This guy's from the Washington Post, just mentioning that, hey, we saw a big, massive crash like we've seen in Bitcoin recently. You know, how does this make you feel? Gary, how does this make you feel about cryptocurrencies? They dip sometimes, they go down. Well, guys, friendly reminder, Bitcoin and cryptocurrencies, if you're not aware of, for Becky in the back, they trade 24/7. They don't shut off, except for Solana. We saw it's centralized and stoppable now. But they trade all the time, 24/7. With the stock market, friendly reminder for Becky in the back, the stock market has exchange circuit breakers. It says under the 2012 rules, market-wide circuit breakers or curbs kick in when the Standard & Poor's S&P's 500 index drops 7% for level 1, 13% for level 2, 20% for level 3. Basically, guys, they're like, okay, Becky in the back, stop selling, stop dumping the market, relax. Don't get those bots to algos go in a dump. So guys, keep in mind, he's saying that Bitcoin's bad, crypto's bad because we're seeing all this price action to the downside, which don't get me wrong, we don't like seeing that. I mean, personally, I think this is a great buying opportunity. That's just my personal opinion. So you do what you want, homie. You do what you got to do. I think it creates a great buying opportunity, but now they're kind of like saying, oh, this isn't good because it's so volatile. But we know the things that are so volatile also create great buying opportunities. All right, back to the video.
Need for some greater regulation.
So crypto tokens, what you've promoted in this program called cryptocurrencies, even though some of my colleagues in the official sector shy away from that term, I'm comfortable using it, are a highly speculative asset class. I started and was honored to research this and study it and teach it at MIT and work with the computer science colleagues. And I think there are innovations in that basic white paper, so to speak, that Satoshi Nakamoto put out about a dozen years ago. And whomever he, or they were, we still don't know, had some basic innovations. But what we have now is an asset class that's highly speculative, stored on a digital ledger. And
alrighty guys, he just called it an asset class. He's calling cryptocurrencies, all these things right here on the hourly that are up, he's calling it an asset class. That's pretty cool. That's adding some legitimacy to cryptocurrencies. Of course, that's nice to hear from Gary Genlser. But they also said in the beginning, they don't like to use the word cryptocurrency. They're uncomfortable. They feel uncomfortable. Oh, boo-hoo, you're grown men. You can't say the word cryptocurrency. It makes you feel uncomfortable. I don't know about you guys. I don't know about, are we getting a little too sensitive? Is cryptocurrency not like does that hurt people's feelings? Should we stop using cryptocurrency? Maybe we should make it more a friendly word for cryptocurrency. Guys, I think this is ridiculous. This right here is ridiculous. We've seen how Ripple for the past years, I mean, you love it or hate it, they've tried to work with the SEC, with multiple regulators, so they can stay compliant on everything that they're doing. They don't want to work against them. We want to work with them. That's what Ripple has done for years. But then you see the SEC attacking them, suing them now, which started back in December. And that's not cool. As much as you hate or love XRP, the big deal is that if Ripple loses this lawsuit, they're coming after your favorite cryptocurrency. They're going after all of them, guys. This is why I'm making a video about this, because that's what's going to happen next. And guess what? Yes, that's extremely fearful. That's not good for your crypto. So just keep that in mind. And we already went over trading holds, guys. It's just interesting how, cryptocurrency is so bad, but the stock market's so much better, right? Because, they halted. So Becky in the back stops freaking out when it falls 7%. There's another part to the clip, though, I want to bring up around 17 minutes in. Let's get that going.
laws are currently written?
I think that we have robust authorities at the Securities and Exchange Commission, and we're going to use them and continue. I think it would be better if the platforms that are trading securities, the platforms that have lending products, who have what's called staking products, and I'm glad to describe that for your listeners, but where you actually put a coin at the platform and you earn a return, that they come in and we sort through, figure out how best to get them within the perimeter. We'll also be the cop on the beat and bringing those enforcement actions as well. Working with Congress would help because there's a lot of coordination by and amongst our financial regulators. I would let the banking regulators speak on their own, but we're working right now under the guidance of Secretary Yellen and working on a report around stable coins. And in the world of stable coins, I do think that there would be some help from Congress. I do think that we can work with Congress with regard to the coordination, again, commodities and securities. But in terms of the SEC, I do think that we have robust authorities, but there are gaps as I've identified them.
Alrighty, guys. Like, they're saying that the SEC has, a robust authority. They can, basically govern anything. They're using the Howey test from back in the 1930s, when cryptocurrencies weren't even around. But they're here to protect us because we need protected. He's mentioning staking. They want the exchanges to come in that are offering DeFi. They want them to go to the SEC and say, hey, guys, we're offering this product. How can we be a good little boy, a good little girl, and help out and follow all the rules? Because this thing's not like it's worldwide or anything. It's just only in the United States. You can't access it out of the United States, right? Because we only govern the United States of America. So it's very interesting to see that they want them to go to them and do that. Once again, reminds me of Ripple. What did Ripple do for years? They were going to the SEC, going to multiple agencies, like around the world, guys, around the world, talking to different regulatory bodies, seeing how they can comply to the rules. They did the same thing with the SEC. And what did the SEC do to them? They stabbed them in the back with a knife when they weren't looking. That's exactly what happened. You love Ripple, you hate Ripple, it doesn't matter. This is all about, we're a community, guys. If you're into cryptocurrencies, you guys like cryptocurrencies, it's all like, we're all one big community here, guys. There's only $2 trillion market cap right now, or like a little less because we had that dump. It might be back up, like whatever. It's around $2 trillion. If we don't stick together, these regulatory bodies, these corrupt regulatory bodies such as the SEC, and more, they are going to take everything down. They are going to pretty much wreck your gains. Don't get me wrong, there's going to be some winners and losers here. I mean, I think very few winners if they go through with this. We know that Bitcoin's the chosen one, which is cool. Don't get me wrong, I like Bitcoin, but I also like speculating in altcoins and making some like 100, 200, 300, 400, 500x gains, because you're not going to get that with Bitcoin. But the whole point being, though, is they want these people, exchanges, DeFi, regulators, devs, to go to them and say, how can we be a good little boy and girl and follow all your rules that you guys can just make up on the fly? I think this is ridiculous. And we definitely need to stand up. Something needs to be done about this, because gains will be taken away. If they're looking at crypto and be like, oh, it's down a little bit. How do you think of the market? Like, this is terrible. How can we protect investors? Are you kidding me? Are you kidding me right now? It's kind of crazy. Once again, guys, stock market has trading halts because when people freak out, they stop the market. It's not capitalism. It's not a free market. It's crazy. Crypto, in my opinion, is a free market, because back when we had the liquidity crisis back here in good old March 2020, I'm sure you're all aware, when the thing fell really bad right here, the stock market got, like, the halts got triggered. Did crypto get triggered? They're like, oh, Bitcoin fell like 50% in one day. That's terrible. Well, how much would the stock market have fell if it was actually a free market? You guys let me know. And something else I speculate on is that Bitcoin fell more because the people that have stocks and Bitcoin, they couldn't sell Bitcoin. I mean, they couldn't sell their stocks, so they sold their Bitcoin because they wanted some cash, because there was a liquidity crisis. So up next, guys, one more clip starting around 26:34. Let's listen up.
History tells us private forms of money don't last long. History tells us that investment contracts outside an investment protection remit, people get
Hey, before I keep going, so like if you guys watch the whole thing, he goes over how before it was like the early 1800s, they had private forms of money, like the Philadelphia had its own money, this place had its own money, and there's a lot of issues. Okay, a lot of issues, and then Abraham Lincoln did something like around his time to solve that issue, and then he goes right into the fact that the Federal Reserve came about 50 years later. Yeah, because the Federal Reserve is what we needed, guys. I don't know about you guys. If you guys look into the Federal Reserve, there is a lot of corruption we see with all these big regulatory bodies that kind of link together, if you know what I mean. I'm sure if you're into crypto, you guys know exactly what I mean. You're into crypto probably because you see the issues that are going on in the real world. You know, inflation. They tell you it's what, 5.4%. I mean, I wish I had a cricket button because, like, obviously 5.4% is like, are you serious right now? You're joking, right? I mean, I think Becky in the back agrees with that, but like, you guys are smart. You guys know it's not real. Continuing on.
Heard that if we have lending platforms that are outside either the securities perimeter or banking perimeter, that usually they get excess leverage and we have financial stability issues. These stable coins are acting almost like poker chips at the casino right now. So add to the Wild West analogy. I mean, we've got a lot of casinos here in the Wild West, and the poker chip is these stable coins, you know, at the casino gaming tables. And so I think there's just a lot of kind of warning signs and flashing lights that we might have a spill in L3, and I'd rather get ahead of it.
Alrighty, guys, there's a lot of stuff going on there. Before we get there, make sure you guys smash that like button. Smash the like button if you guys like this content. As we can see there, he says there's poker chips. Basically, crypto is the wild, wild west. I understand the crypto homie is all about the wild crypto journey. Guys, we love the journey. The journey is amazing. It's not about the destination. It's about the journey of getting to the destination. But he's calling stable coins securities. He's going into that. I can see why he's saying that. Like, you can argue both sides. I get it. I believe crypto needs its own rules. I believe crypto, we cannot be judging crypto based off the Howey test. But then again, we know we're ruled by corruption. So the Federal Reserve, the SEC, etc., they create their own rules and they go from there. They do not want the average guy making money. They do not want the average guy getting 4% interest on Coinbase. They do not want that to happen. They do not want you getting your 7.5% on Blockfi, which you can get if you use the link down below. They don't want you to get that because then you're actually going to make money. You're actually going to go from there. They want you to get your measly 2 to 3% raise every single year at your job. And then inflation's 10 to 15%, which they're not telling you that. They're like, it's only 2%, homie. It's only 2%, you know, and then most people believe them because they're just silly gooses because they don't actually look into things and they just believe what they're told. So the whole point though is they're coming after crypto. He's basically saying that stable coins are securities. This is a wild, wild west. This is basically just a casino with altcoins, which I mean, I kind of agree. That's why I like it. I mean, I'm not going to lie. Guys, we look for asymmetrical risk. You want to go, you know, high risk, high reward. I want to make some big gains. Of course, you know, that's a part of your portfolio. Then you have more conservative part. Like, don't go all in on some crazy stuff. Like, if you're all in on meme coins, I don't know what you're doing, homie. Like, I hope it works out, bro. But like, you're probably going to get wrecked. It just is what it is. But if you want to take that risk, see, that's the thing about America. You know, this is freedom. We're all about freedom. If you want to take that risk, then go for it. Like, I don't care. Now, don't cry when like you get wrecked. Like I mean, you know your risk versus reward. That's why we all have different risk tolerance. There's not one strategy that's perfect for all of us. We're all in different parts of our lives. And the issue though, with all this, like the SEC, you know, they want to come and crack down and be like, oh, you know, these stake rewards, we're going to have to shut them down because they're offering way higher yields than our banks can ever offer. Well, because the banking system's corrupt and we all know that. It's watching here, so I'm not going to dive into detail on that. But why? What can we do? What can we do to prepare for this? At the end of the day, I mean, we can of course try to, you know, contact the congressman, all that great stuff. Personally, I feel like that's just a joke. They just give us that opportunity to make us feel like we have some kind of control. So, I mean, what can you do there? You can be your own bank. You can understand how to use crypto, spend time, understand how to use cryptocurrency, understand how to be your own bank, understand how to do that whole thing, how to have your own wallet, how to transact. Go from there. I mean, there's so much stuff in this space. How to get a loan on DeFi, how to just buy an NFT, how to make an NFT, how to mint, all this great stuff. Not just with the Ethereum network. There's many blockchains out there, guys. We know, of course, Binance Smart Chain, Cardano, Solana, Polkadot. Polkadot actually has some interesting stuff coming up. But I mean, look at Hex right there, 43 cents, baby. But like the whole point though, guys, is understand crypto and actually understand the ethos behind it and go from there and understand how to use it. Don't just be using it in exchange, because when they come after crypto, if your crypto's on an exchange, probably won't be good. So I hope I'm wrong about this. I hope this is just a scare tactic. And I hope they actually just fumble the ball and don't actually do anything about it. I hope this is like, you know, like a big bark and no bite. But I don't think that's what's going to happen. So guys, what do you guys think about this stuff with Gary Genlser? What do you think is going on with the SEC? Do you guys agree with what I'm saying? Do you guys disagree with what I'm saying? I would love to hear what you guys have to say about that. Either way, if you agree or if you disagree. But let's head over to good old BTCs on the daily. Let's see, how are we looking? Let's actually pull it up. So as we see here, guys, ooh, look at that. Like, let's go. We got a nice green candle. Let's see how it closes tonight. Like I said, we're live 7 p.m. Monday to Friday, 7 p.m. Eastern time, Monday to Friday. So I said that wrong there. But yeah, so like we'll see how that closes. I'm liking what I see right here. That's looking good. We did see last night on the fear and greed that we are extremely fearful at 21. At 21. And I do want to point out, though, with some news such as this, you know, with the Gary Genlser said last night, like this is new news, not old news. If we were really in a bear market, if we were really bearish, if the sentiment was very bearish, which I mean, we are extreme fear, so that is, one could say bearish, I would expect the market to dump based off this news, calling stable coins a wild casino, you know, saying that they need more regulation. You know, he beat around the bush, but I mean, I can read between lines. I was born at night, but you know, not last night. So just keep that in mind, guys. I feel like we would have dumped pretty hard with this stuff in the bear market. Like if you going through this last bear market, if we'd had news like this, we would have dumped like crazy. So let me just get the headset off. But the whole point though, extreme fear, we'll see how this bounces. I said I wanted to see us down at extreme fear when we like to see a bounce on the bottom here. Because look, we had that bounce. Looks like we're not loading. That's interesting. Anyways, I can't pull that, but we had our bounce down at extreme fear last time. So that that's pretty cool to see. Quotes right there. We had the bounce right there. We were down at extreme fear for some time. For it looks like well over a month. So that were like right there was nice. We bottomed down there. That's great. I feel like we're probably gonna be down here a little bit longer and we'll go from there. But then again, this is crypto and things can just go parabolic. We see the on-chain data is showing that we're drying up the supply. So we'll see what happens there, guys. We'll go from there. But I'll catch you guys tonight at 7 p.m. I'd love to hear your thoughts. What do you think about the good old Gary Genslers? What do you think is going on with the good old regulators? Are they here to save us or are they here to take our gains? Let me know down below. But as always, guys, I'll catch you in the next one. And you know how it goes around here. Until next time, may the gains be with you.